just left on. Good afternoon, everybody. What's up? Good afternoon, good afternoon, good afternoon. Let's jump in. Huh? That's fine. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I'm no longer an SEDG. I believe everything else is the same. Oh, it says snap twice on there again. I don't know why that happened more than once. Damn, fixed. Fixed. Alright. Let's jump in. So the S&P finished down 1.4%, over a percentage point in the S&P. That's actually become a pretty big move for the S&P based on what we've seen recently. The Qs finished down almost 3%, 2.9%, a little bit of a bloodbath in the Russell, in the Qs, while the Russell only finished down 0.9%. So once again, we actually had some solid outperformance from the Russell, despite the degree of extension we have up there. And the Qs really started to break down a little bit. So I guess we can start with the 5-minute chart. 5-minute chart of the SPY is fairly boring, like it always seems to be. But we never got a V-bottom today. You know, we retraced into that equilibrium off the open, but we never got any follow-through beyond that. And we actually closed pretty near lows. And this was the big key. If you guys remember in the morning meeting, you know, we always try to go from the big picture down to the small picture with what we're doing. I think that's the best approach to markets. Let the big picture tell you strategy, let the small picture tell you execution. So from a small picture perspective, when you have a large gap, we haven't dealt with a ton of large gaps recently. I guess with the IWM we have, but overall with the S&P, we haven't dealt with a lot of large gaps in quite some time. When you have a large gap, you're gonna gain information based on how the market treats that gap in the beginning of the day. And I think that the best way to do that, or one of the best ways to do that, or gain that information, is by studying how the S&P trades versus that opening equilibrium zone on the small time frame. So whenever you get a large gap, it inherently will make that mark or that market or that stock extended on that small time frame for a little while. And then, you know, because it's such a small time frame, the ADMA can catch up very rapidly because it's only, you know, 8 periods and it weights the most recent bars more than the earlier bars. So this ADMA can catch up very rapidly, but you're always going to start with a lot of extension. You know, at the opening tick on the 5-minute chart, the SPYs are trading at, you know, 558.78 with the ADMA all the way up at 563.47, kind of as a continuation from yesterday. So, you know, on the small time frame here, you got $5 of extension from the SPYs. That's a lot. That's a lot. But that's going to not last. There's no way that can last for a very long period of time. On your weakest days that you will ever see, you could get like a really big gap, and then you could get like opening momentum because there's a COVID crisis or something that's going on that's affecting the market, and you can get opening momentum that can really drive the market and extend it even further. Even in those most extreme situations, you'll still see that ADMA touching price by 11, 12 o'clock on the 5-minute chart. And I'm talking about like the most extreme situations that you can have. It's almost like a mathematical law, just based on the way that the numbers work, that at a certain point, you can't just extend forever from these moving averages. And different time frames have different effects. We spend a lot of time talking about time frames, but it's fairly rare that you'll see a market on a 5-minute chart still extended past 10 a.m. Sometimes it could re-extend, meaning, you know, you get a price correction, touches the ADMA, or in this case almost touches the ADMA, and then you get a next leg of a sell-off where it kind of re-extends. But it's very rare, not impossible, it's relatively rare though that, you know, you're going to go more than 30 minutes without the ADMA touching the price action at the beginning of the day, even on a large gap. It happens, it definitely happens, And then the more time that goes by, obviously, the more rare the situation is. And you just kind of want to measure that. And the price action here on the small time frame starts to tell you how you can think about your strategy for execution based on the information that you're looking at for the big time frame. So what we talked about today was, in the morning meeting, let's look and see off of this extension if we can get some sort of opening bounce. We're talking about this specifically with NVIDIA also, but really for the market as a whole. Let's see if we can get some sort of opening bounce. Let's see how the market handles that opening downside extension. And, you get this great little opening price correction here. You could have tried to find a long opportunity here for an opening scalp, maybe a long off that opening low when you see us trading our way higher. That's going to be kind of a quick time frame trade. You get up to this, approaching this 80 MA on the daily chart. You want to have sold the vast majority probably of what you have, and then maybe you can hold 25% of your position just in case this retracement becomes a reversal back higher, which on gap downs will happen fairly often if the daily chart still is in a bull trend. So that circles back to why the big time frame is where you're getting your strategy from, and your small time frame is how you're doing your execution. So based on your view of the big picture, kind of tells you how greedy you would want to be on an opening long into this bounce. Big picture says we should be continuing higher, and I happen to have a gap down today, then I want to be looking for that bigger bounce and keeping a larger percentage to see if this retracement becomes reversal. You probably still get a pullback off the 80 MA, but that pullback off the 80 MA creates a higher low that leads to a higher high that gives you a 15-minute correction, rinse and repeat on the 15-minute chart. Next thing you know, you're working up and filling the gap. The flip side of that is market price corrects like it did here and then breaks the opening low. That's something to take notice of, because it's one thing, if the market just gaps down and sells off, that's just pure momentum and probably can't last for a significant period of time. But if the market bounces back into this equilibrium zone, creates a pivot, and then breaks that opening low, that shows you that the selling is more real. It's not just opening momentum panic from longs that are out of the money that are peeking out their stock. It's more legitimate sellers who need to liquidate a position over time, / not enough buyers to be on the other side of that creates enough real selling to break that opening low. And that's something to take notice of. If this type of situation, you get a big gap down, you get the equilibrium catch up through timer price, and now it's post 10 a.m. and you're breaking lows, that's oftentimes a signal that you're going to have a weak day. Now, I know it's become kind of a modern phenomenon of this market and can still happen where you get these like midday reversals. I feel like maybe to some degree what I'm talking about here with that opening low breaking leading to consistent weakness was even higher probability prior to all the 0 DTE phenomenon and the effect that that's been having on the market, because midday reversals used to be like the rarest thing that you would see. Not impossible, but they used to be very rare. Now it seems like they happen all the time. But it's still something that you really want to take notice of when you break that opening low, that you're probably going to get some consistent weakness throughout the day. And then a lot of times then just becomes a matter of, well, will we see a little bit of a rally into the close or not? Because when you've got a very weak downtrend all day, more like the Qs, sometimes, and we didn't get it today, but there's a decent percentage of time where the market does the opposite into the close, and it's just profit taking coming in from the trend following algorithms that were just shorting on the moving average and riding the small time frame trend down all day, and then they're just like, all right, we're gonna take some profit. They're profit taking, they're buying, triggers more buy stops, and you work your way up and you get a little bit of a push in the other direction in the close. It's not unusual, and oftentimes doesn't even really change the picture of the daily chart. We did not get that today. SPYs closed near lows, Qs closed at lows. The Qs are actually approaching $10 of extension to the downside, which is impressive. I think we're basically there at the close. The ADMA is at 491.82. The market closed at about 482. So right now, including the after hours price action, we are just shy of $10 extended away from the ADMA on the daily chart. It's always interesting, and I think Brant made a comment about seeing downside extension today. It's always interesting when that happens, but the moving averages haven't even crossed yet. So it's an interesting situation, because most of the time when you're looking at an extended market, you're extended from the 80 EMA, and then you're even more extended from the 21 EMA, just because in an uptrending market where you'll probably get extended to the upside, the 80 EMA is going to be above the 21 EMA. In a downtrending market where you're more likely to get extended to the downside, the 80 EMA is going to be below the 21 EMA. So that 80 EMA typically then is your lower band of equilibrium. It's a little bit weird when you're getting $10 of downside extension from the 80 EMA, but only $4.50 of extension from the 21 EMA. It's unusual. You don't see it very often, but it's happening right now. So we'll see. I on the one hand, and I got this question I think a couple times throughout the day, is today a day one? Quite possibly. I would be interested, just off of extension rules, if we can get a relatively fast move tomorrow to like 477-ish, 477.50, to then maybe really come in on the other side to take a little bit more of a stand. I had I think 3 or 4 different TQQQ long trades today that were just like quicker day trades that all worked, which is great. But those are meant to be, quicker day trades, similar to what we talked about in the past. The first one I took was even off this early low here at 9:45. I'm like, all right, we've gone sideways, we've gone lower here for 20 minutes. Might even have been at the 9:40 candle. I'm like, look at all of the extension that we actually have from the 80 EMA. Let me come in on the other side and look for that little bounce trade like we've discussed. I went over it in detail the other day, where I will just kind of work the increments where I'm buying a set amount of stock. I think we got into detail off of a question that came from Jim. I'm just buying some stock, just looking for a move to the 80 EMA, and I'll buy and sell and buy and sell to work the range. I'll continue to buy. If we get more extension to the downside, I'll continue to buy. I'll work the position. And again, it just becomes a mathematical law that at a certain point this 80 EMA is going to touch, and I'll be consistently lowering my target and lowering my target and lowering my target based on the 80 EMA catch up. So when I first bought that, I think I bought it, and I did it for the TQQQ. I bought it for, to see if I could get a move to, I think, like 77.75 or so is what I was looking for. Again, calculating that the 80 EMA will continue to come down, not trying to be too greedy. But this just turned into a time correction. So I'm watching this time correction, and I'm lowering my final offers, and I'm lowering my final offers, and I'm lowering my final offers. And then when we got this little spike here at 9:50, I had lowered my offers so much that I just threw in like a risk reward stop on my remaining stop, which then triggered. So I was out of the way and actually made money long here before it broke down. And then I tried it again a little bit early, a little too early, on the 10 a.m. bar, doing basically the exact same strategy, starting small, looking for a little bit of a snapback to the 80 EMA, adding on the way down, and even with starting too early and with lowering my final profit targets, I was able to make money once the 80 EMA actually got touched, and I liquidated the position, and I moved on, because the market's weak. And I'm just coming in for these cute little bounce trades into bigger extension points where I can try to work the position to be able to, make money versus how that 80 EMA trades. And then I did a little bit of a different fashion, more midday and into the close, that were actually a little bit more profitable to me than what those first couple trades were. So those are more kind of day trading, quick cash flow strategies. But if these Qs break deeper tomorrow, and we'll, assess the price action as it comes, but I think if we get closer to that like 477-ish zone, I might be willing to take a little bit of a bigger stand there, just based on the broad extension that we would have by that point on the daily chart. You still would have to be careful there, though, because it would only be a day 2. I would feel much more comfortable if we were getting into that 477 with $10+ of extension from the 80 EMA, and it was also a day 3 or a day 4, which is, kind of similar but different to what happened on the short side with the IWM. I started yesterday to short the IWM very small, but different than the way that I had traded it on a couple of the previous days. A couple of the previous days with the IWM, I traded it similar to what I did with the Qs, where it's just like a quick trade based on the small time frame extension, understanding that there's some big time frame extension as well, but also, hey, it's only like a day 2 here, I want to be a little bit careful. Or the IWM, knowing that this move could be so powerful, same thing even on the day 3. I was like, oh, it's a day 3 here, I want to be a little bit careful. And it was only on the day 4 that I started to really lean in more based off the daily chart extension for something that is meant to be more than just a small time frame scalp off the small time frame extension. And it definitely hurt to do that yesterday, to be totally honest. I started building in a little bit too early. I don't remember exactly at what price, but luckily I started very small. And we just continued and continued and continued to the point where, you know, closing on highs, I was down a decent chunk of change in my IWM short yesterday. But, you know, keep in mind that when I'm doing that trade with that strategy, it's also acting, at least to some degree, as a hedge for me also. So I finished down a decent chunk of change in the IWM, but I was actually up a lot of money at the end of the day still, because I have all these other longs that are more correlated to the IWM than anything else. It just actually made my P&L less than it would have been otherwise, which sucks. You don't want that, but they're different trades on different time frames, and I'm sticking with that trade yesterday, you know, through today, still looking for that correction. And we got it in a minor way today. I was actually looking for a little bit more, but we got it in a minor way today. It wasn't easy. You know, pre-market we were above 225, above yesterday's high. We actually got like a pre-market RDR added on that. Took that as a trade. Then the IWM actually opened down nicely in my favor, so I was able to cover a lot on the way down, and then just immediately regained control and just totally ripped, which was crazy. And I just continued the strategy from yesterday, because it's still, we have to balance the fact that an extended market can always become more extended, which can be dangerous if you're doing things counter trend, with the fact that it's basically, like I'm saying, a mathematical law that you can't extend away, especially on the index level. You can't extend away from that ADMA eternally. And then it becomes a matter of, you know, how do you trade the position? How do you work the position in the meantime to cushion P&L, to maximize P&L while you're waiting for that correction to actually occur? So, you know, I mean, I traded a boatload of the IWM today. Show you my chart with my executions on it. Good luck trying to read it and figure it out. But we can even go, you know, we can even go pre-market on when I first was putting those kind of add shorts on above 225, and then covering them all on the way down, and then reshorting. This is now I'm city biking to the office, and then reshorting, you know, a little bit on the bounce, and then covering that, and then, you know, reshorting and continuing to add all the way up, and then covering that all the way down, and just, you know, continuously working the position so that, you know, by the time we're at 222, even though, actually, now I think about it, I started way early in the IWM yesterday. I think I started even below 220, very small. But by the time we're at 222, you know, I've more than made up for the negative P&L from yesterday, just by the way that I'm actually trading it. And the trade hasn't even worked as far as I'm concerned. Because, you know, the IWM here is still at 223, and the ADMA is still down at 214.50. I mean, we've still got $8 of extension on the IWM. I mean, that's still extreme extension on the IWM, and that's after we pulled back $4 from intraday highs today into the close. Just very impressive strength. And honestly, the IWM was still very strong today. So it's just, again, it's just a matter of multiple time frames and the time frame that you're trading on and how you're able to work that trade versus where the moving target is, for me at least, on a counter trend trade. And then for me, the benefit is, and why I like these trades, I tend to end up doing it more with the Qs, because we see the Qs get extremely extended more often than we see the IWM get extremely extended. I like that I can put this trade on, and when it's going against me like it was yesterday, I'm very comfortable, because all my other positions are working is what that means. And then if I'm a day early and then the short works for me on day 2, I'm also very comfortable because now maybe I'm giving back some of the P&L on my longs, which I did a little bit today, but I'm able to now be making the money on that short side and kind of again just working the trade. So that's a lot of, I guess, what I'm doing and how I'm focused on positioning. This market is just very interesting. Today would have been a day 5 for the IWM if we closed well. We didn't. We closed down. We have an upside tail here. That upside tail indicates that more correction is needed. Pat was saying, I think into the close, if I was listening to him correctly, that he's starting to think that this is even looking more like a time correction than a price correction, and I kind of agree with him. We'll see how that plays out. But this ADMA is going to continue to move higher. Tate saying probably be at 216 tomorrow, so it's going to keep moving higher. So that's a moving target, moving against you on a counter trend trade. If you're just looking for a touch of equilibrium, if you're just looking for a price correction, there's a very real chance that we just go sideways and we don't even ever lose like 220, and this ADMA just continues to catch up. In that case, in that type of trade, I'll not make any real money from the move in the IWM. I'll only make money from how I traded it intraday, which for me is enough. You go back to the same trade just done on a microcosm as a day trade. This TQQQ trade that I took here, this thing just time corrected on me. I didn't make any money on an upside move, but I made money in it just from how I traded it within it. So, the IWM will be, hopefully, the same thing but different. If it just time corrects, I won't make any real return from the move lower because I started too early, to be honest. But I will make enough return and probably be profitable in the trade just because of how I actually traded the trade in that moment. So yeah, it's a lot of what I'm doing. I'm very market focused right now. This big picture of the market's providing a lot of opportunity. I'm trading the indexes a lot more than I usually do. There's a lot of times today where I was trading the IWM short while I was trading the TQQQ long at the same time. I was half joking about getting mean reversion of the mean reversion on a small time frame, which could mean that the IWM sells down a little bit to correct this daily chart extension, while the Qs give an intraday bounce as it's getting extremely oversold on the daily chart at a certain point. And that actually never really fully materialized. But yeah, I'm definitely very macro focused. Still taking some trades here and there. Some of these names got obliterated today. Snap was just gross. Huge down day in Snap. Lost this major $15 support area. They wrecked it lower. People seem to be attributing it to Trump saying that he will not ban TikTok. We'll see what happens. He was the original person that wanted to ban TikTok. What else? There was another one that I was going to bring up, but I don't remember what name it was that got absolutely... Oh, AMD. AMD got thrashed today. AMD circuit broken from today's trading session. Some, definitely some negative stuff out on the semiconductors this morning. I am back in AMD. Reinitiated that position early this morning. But, this is what I do. I take back stock and trades that I'm up a lot in and risk the money that I've already made in order to make more. And I had basically been fully out of this position and then, started to rebuy the pullback. But they obliterated AMD today. It was really, really gross. Amazon lost 190. It was disgusting during the day. Google lost some support today. I mean, these Mag 7 stocks. Actually, Apple isn't too bad. Apple continues to just be the best stock out there. It's really, really impressive. But most of this other Mag 7 stuff got obliterated. And you still saw some of the names. I mean, we were bullish on XLE today. This was my big bull call of the morning. This is what I liked more than anything this morning was XLE for the inside and up above 92. Really good trade. All those names look really good to me. They're cheap on a fundamental basis. They should see the rotation continue to come into them, I think. So really like how this XLE is starting to look back above 92. It can be a bit tricky to trade. Financials gave a continuation day today. The financials still look incredible, but they're getting too extended. I've really liked a few of those earnings report. I really liked that Goldman report as it came out. So XLFs continue to look good. There were some growth stocks. There's some growth stocks that got smoked and gave back some of their gains, but there's some other growth stocks that continued. Unity gave another update today. You know, move from 15 to 18 in a few days is a pretty decent move on a percentage basis. So a lot of these names are, you know, kind of continuing to hold in as the money comes out of Nvidia. It needs to go somewhere, especially if the S&P holds in. And the S&P actually had a bigger down day today, so it seemed like there was a little more downside correlation today than, you know, we've seen kind of across the board. I don't have any data to back that up. It's just kind of based on what I felt I saw during the day. But, you know, still a relatively insulated intraday move on the S&P. That's all that I've got. I'm happy to answer any questions that you guys have. First thing I think I'm seeing is from Sharir. How did you know to get out of the position when you did the Qs, for example? How did you not feel like it had to bounce more? Because I don't... I'm entering a trade with a game plan, and I don't care about how I feel. I don't care about what I think, and I don't care about what I feel. I care about what the game plan says to do on a counter trend trade. And the counter trend stuff, it just said, I mean, look where I got out of this one in particular. Right at the ADMA. It's exactly what I'm looking to do on this trade. And I'm lowering my target because the ADMA is moving down. This has got nothing to do with my feeling it could go up more. I did feel that it could go up more, but it didn't matter. It's not what the trade was. I'm recognizing the Qs are breaking down. They're below support. It's a counter trend trade. I'm just looking to put a few dollars in my pocket here. I'm not going to put a few dollars in my pocket by being stubborn, looking for the bigger move, and then not getting out when this break occurs at 10 a.m. And then I'm just in a fight that lasts all day, where my P&L is negative all day, and I'm just trying to return back to break even. It's just about being disciplined, Sharir. It's about being disciplined with the game plan that you're implementing on that trade and not being stubborn based on what you're thinking and feeling. Yeah, I kind of think it's a little bit of a day one also, Blaine. We'll see. Over to YouTube. When you're looking for those bounce trades back to the EMAs, do you always wait for the candle to shake out the previous candle low and buy on the way up? No, I don't. I do look for good execution on the first entry, and a lot of times I end up doing it with like a 5-minute RDR, that's what I was calling out here, even though that's not how I traded it. I called it out for other traders at 10:10. That, you know, all right, this is a day 4. This is a 5-minute bar 4 on the Qs. A lot of extension on the 5-minute for 10:10. I think that you could look for the 5-minute RDR, which again is just to bounce back to that equilibrium zone. So that's one way in which I like to really initially execute the trade. That's honestly not what I did today. I was just looking at the chart and going, oh, it's extended, so let me just buy some and work the trade versus the extension. But I think it's probably better to have better execution and do like a 5-minute RDR like you're describing. I think that's what you're describing. How important for you is it to see that shakeout and immediate rebid back? I found that signal works much better when we have that shakeouts. I agree with you, and that's the whole concept behind what an RDR is. It's, you know, that next bar shakes people out, and then you're kind of buying back on the way up for their pain when they're shaking out of the position. That is why it works better. From Cyril, do you think that the pullback in the IWM can also drag the SPY to pull back? Basically, if everything SPY go lower, the IWM retraced January 2022 highs and needs a pullback. So the real question, I think, is if correlations can increase and we can lose the dispersion trade. We have been very much in a market of winners and losers, with the SPY not doing too much because that positive gamma has been so big. The moves are very insulated. Like, I know this isn't accurate, but to me it feels like, again, it's not accurate, but it's what it feels like. It feels to me like the SPY is up 0.2% every day. I know it's not. Some days it's up more than that. There are red days, but it just feels to me like the SPY is up 0.2% every day and is very boring intraday. Yet all of this stuff is constantly happening underneath the surface. For a while, that was Mag 7 or even Mag 3, bringing the Qs higher and just going higher every day, and everything else being very weak, right? Because if NVIDIA is up by a large percentage point, a large amount, and the effect of NVIDIA on, let's just say the S&P should be, NVIDIA alone should make the S&P be up by, let's just say 1%, which is that's a big number, but I'm just trying to use this as an example. NVIDIA is up so much today on an earnings report that its effect on the S&P should be that it's up 1%, but the S&P is only up 0.2%. That means that everything else out there has to be red enough to negate that 0.8% that the S&P doesn't have just from NVIDIA alone. So, it seems to me, it's felt like the S&P has just been up 0.2% every day, but the Mag 7's up huge, NVIDIA is up 150% or more on the year or something like that, and everything else out there just hasn't been able to participate and hasn't been able to go, and that's like structural in nature for the market. It has to be that way. But then if the S&P is going to do that same thing and be up 0.2%, let's just say, and I know it's down today, but NVIDIA is actually red, that means that NVIDIA is now, and it's the largest market cap, a net drag on the S&P, but the S&P is still up 0.2%. That means like every other stock in the universe has to be green in order for that to happen. So we saw starting Thursday of last week just a very big shift in who the winners and losers were of the dispersion trade. It went from just these few companies the entire year pumping the S&P and pumping the NASDAQ to those companies selling and everything else getting bid, and look what the S&P did. Look what the S&P did. Again, a little bit of a weaker day today, but look what the S&P did over the course of those few days. Not like nothing. Up 0.2%, up 0.2%. Even today, the big sell-off in the S&P. The S&P is actually down 1.3% today. It's like a big number for how this thing has been trading. All we are is back at the price point levels from like 3 days ago. That's it. So the real question, I think, that you need to try to figure out, that we need to try to figure out, I guess, as a team, based off of the question that you're asking me, about the SPYs going lower, is can correlations increase? Can everything actually move down together? It should be noted, and I think that you see that even today, that if you have real weakness in the Mag 7, that maybe instead of the SPY being up 0.2% every day, now we see it as down 0.2% or down 0.5% every day. But if the market continues to trade in the same way that it has been and the structure stays the same, it'll just be because the IWM keeps holding up and going up and holding up and going up as the Qs continue to correct. So can the S&P go lower simply because of the market weight? Yes, it can. But I don't think that you see like a dramatic sell in the S&P unless the correlations can increase. And I think that you only see the correlations increase if the VIX spikes. And then the VIX spikes, and the resulting selling that comes in the market is so heavy, whether this is an event or technical based on positioning or whatever else, that actually can kind of break through some of those supportive gamma levels, that then it kind of begins to feed on itself, and then you can actually potentially get selling across the board in the indexes. That doesn't seem like it's where we're at right now. It's definitely possible for the near future, and I think that is one of those things that could happen as we kind of go into the market's election cycle, which, we've spoken a lot about it, and Rubner at Goldman has spoken a lot about it, where it just tends to be a weaker period of time for the market. The question is, what does that weakness look like? How does the money rotate? And is it heavy enough, especially if we get points in time, like I said in the morning meeting today, Friday this week, 2/3 of the long gamma in the S&P is going to roll off. So that means that next week, it's still going to be positive gamma, but it's not as positive. It becomes easier to break it, and potentially the distribution of outcomes starts to increase after Friday. But at the same time as that, the gamma still will be positive, and unless the market breaks relatively quickly, all of the vol selling that comes in, all the structured vol selling that's coming from a lot of those ETFs and traders and everything else, just immediately starts to add the gamma back on, and then you go back into this cycle where the market is just super insulated, and that's exactly what we have been dealing with. So I think that answers your question, Cyril. And yeah. I see there's some questions into the VTF. I'm going to stick with the YouTube for a second, then I'll come back to the VTF. From Apex Joy, is there a theory out there about recent small cap jump versus large cap drop? I just went over it. I can't imagine individual investors would buy up regional bank stocks like NTRS, etc. Could it be a hedge fund squeeze? It's everything that I just explained. It's if NVIDIA is going to sell off and the S&P is going to be flat because it can't sell off because the gamma is so heavy, it almost becomes an arbitrage trade for the regional banks to go higher. Like they have to go higher. It's like forced buying. And yeah, to flip back to positioning a little bit, for those there's an interesting stock positioning situation as far as equities go as this dynamic is occurring, which is adding more fuel to this. Magnificent Seven has gotten very overowned at this point, and energy stocks and bank stocks and small caps and mid caps have gotten very underowned. And I think that's where a lot of the shorting has even been for those funds who are trying to create alpha in this market. So all of a sudden that's even additional fuel to the fire, is just that positioning as far as the back and forth there. So I hope that helps, Apex. Marcus in the YouTube is asking how often I go live. I do this typically Monday through Thursday at 10 after 4. This is the team afternoon meeting for the professional traders at T3 Trading Group and T3 Global, but I broadcast it on the Derrick the Trader YouTube for everyone's benefit as well. So if you're new, Marcus, welcome, and feel free to shoot me an email if you want to learn more information about how we operate. Oldensmith at t3trading.com. Back over to the VTF. Blaine asking if I would short a gap up tomorrow. Maybe. I got to see where it is. Those types of questions I really prefer to assess in the morning when I have more information and I can see how big the gap up is and what the technicals look like and where the moving averages have adjusted to by that time. But I definitely don't hate the idea after a sell today, if we get a gap up in the Qs, to short it. From Vikas, how many trades do you take a day? I know you spend hours preparing, but I'm wondering how you're managing all these game plans for all the stocks at once. Sometimes I think I'm going crazy, Vikas. How many trades do I take in a day? I don't know. It varies. Today it looks like I took something like 1,400 trades, if you want to count executions as trades. I think I did like 1,400 unique executions today. They're not all trades. A lot of them are within trades, but and then they're of various size, obviously. So it's not my volume number necessarily. That's my amount of executions. I'm just eyeballing it and estimating it. Cool. All right, guys. Looks like we got through everything in the VTF and the YouTube. I'm gonna wrap it up. I've got somewhere to be this evening, so I'm gonna wrap it up there. Have a great night, everybody. I will see you all tomorrow.